This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe. We're going to talk about MACD and ADX today in multiple time frames. And I have a specific trade set up that develops I would say, on a pretty regular basis. And I think a lot of people miss it because they're just not accustomed to looking for it. And so I want to go through that and making sure you understand what we need to see on the higher time frame first before we go looking for this on the lower time frame. If you're interested in learning more about these techniques, I would suggest starting with the book. I'm offering it at a discount right now, and you can find more information at rabilstockresearch.com/book. Okay, so I've got Wells Fargo's chart up. I've got a monthly chart in the bottom left. I've got a weekly chart in the bottom right and a daily chart in the upper right. And those are the ones I want to focus in on today. I'm going to just briefly touch on what's taking place on the monthly chart here and why it was something that we wanted to be watching. If you notice, the 18-month line had been up, rising here up until early 2023, and then it turned down. It was down for basically the entire year. But then to start this year, it turned back to the upside. Price got back above both the 18 and the 40, and both lines were rising. If you notice, the MACD was also turning the corner, but right around the zero line. We really didn't have a lot of overrun when it comes to MACD on the longer term time frame. The other thing I would tell you is, yeah, we saw negative DI pop up above 25, but we really didn't get a lot of strength in that move based on the ADX reading. All right, so we have that as sort of a backdrop. We've got a pretty long, almost 2-year sideways consolidation pattern that was developing. All right, so I like the fact that we have that as sort of a backdrop. And I really like the fact that the 18-month starting in the new year was turning back to the upside. Now, if we look at the weekly, we had this really nice move to end the year, a lot of strength. Big move to the upside, and then we get what I would consider to be an ABC correction, where we pull back, and that's the A, and then we rally up, and we even went to a minor new high, but I would still consider that the B. And then we pulled back, and we made a higher low. Now, even though it makes a higher low, I'm still considering this the C. So we've got an ABC. Just get used to being on the lookout for a pattern that can develop where after a move to the upside, you can get a move down, a rally up, and then another move to the downside. A, B, C. Now it can come, as I'm showing you, it can come in a lot of different forms, right? It doesn't have to make a lower low. It can do it exactly like the way this played out, where we pull back and test the high, and then we come back and make a higher low. So as long as you're aware of that, I think that's going to be very helpful. We see that a lot when we make moves that get stretched away from the 18. Normally, you need a little bit more time to consolidate those gains and digest those gains before it's ready to go again to the upside. So what we want to do is recognize that and realize when there's air between price, when there's some air there are times that we're going to get some kind of an ABC consolidation pattern. Now, I know if the ADX is rising, we don't have to come all the way back down to the 18 like we did here. We never even touched it before we started up again. But that's a little different than what I'm trying to describe. What I'm trying to describe is we get to the breakout point. We even break out. We have a nice green bar, but we're up 5-6 weeks in a row. In order to digest that and maybe fill in some of the gap between the price and the moving average, sometimes you need that ABC. So always be on the lookout for that. Now, if you also notice, we still never, the MACD stayed above the signal line the whole time. I mean, we had kind of what I would consider to be almost like a little double pinch play pattern, where which is kind of rare, where you pull back and you pinch and then you do it again in the form. And this came pretty close to the signal line before it took off. So I guess the point I'm trying to make is we've got a lot of strength in the move. We know that on the bigger picture, starting in the new year in 2024, the 18-month turned up. We were above a 40-month moving average. And then we get strength. We had already had strength on the weekly chart based on the momentum. And then we go through this consolidation phase. All right. Now, so I know on the underlying condition is actually very bullish. By the way, if you're enjoying the content, hit that like button and also subscribe. I'm continuing to try and grow this channel, and I appreciate your support. Right now, if we go and look at what has taken place on the daily chart during this time frame, we get a move to the downside, and we actually test the zero line. All right, it doesn't make it all the way, but it gets pretty close. And then we get a pretty significant rally, and then we come back down. Now, that's that ABC I was talking about. But if you notice the way this played out, and this is something that I want you to really be on the lookout for, we've got a higher low that develops as this is consolidating sideways. So, as I say, the ABC formed a higher low rather than a lower low. Whenever I see that, you got to become conditioned to go look and see what MACD is doing. And if you notice, it makes a lower low here. All right, so we're making a higher low in the price pattern, and we're making a lower low in the MACD pattern. The other thing that you can also see periodically, and this doesn't really qualify as divergence because we're making a higher low here, but also notice how the valley of the histogram is making a significantly higher low. So that's a little bit different than what we're seeing in the MACD itself, right? The MACD is making a lower low here, but if you notice, and this might give you a little bit better idea of how this can happen this way. You notice how there's a pretty significant separation between the signal line and the MACD on this decline. Well, that's why we get a pretty deep valley here. But then to notice the second time when we come back and test the zero line here, we don't have as much separation. Do you see the difference? So this is showing a lot of separation between the two, and this is showing a lot less. And when you see that, you know that it doesn't take as much effort to get through the signal line. Where when you're down here, you have to move up. You see how many days you had to move up to the upside to cross the zero line? You don't necessarily have to do it that way when you're closer to the signal line. All right, so you got to be looking for these things when you're going through and looking for these patterns. Also look at what the MACD is telling you. So we get our lower low while this is making a higher low. So it's a reverse divergence. It's right out of my course. I go through it, and in fact, it's in my book as well. Now, I did want to point out something on ADX as well. When you show a lot of strength to the upside here, you notice this is the 50 level going across here. This went well above the 50 level. All right. So in order to get the MACD back down to the zero line, sometimes you don't get it all the way. Sometimes it only comes back down to 25. In this case, if you notice the way this played out, and the reason why it turned into such a great signal is not only did we have the reverse divergence right at the zero line, but we spent enough time for this to consolidate and create a low ADX condition where it was below 25 and below both DI lines, okay? Now, the kicker here is, what do you do in terms of a trigger? Well, we can always, once we see this developing, we can always go down to the hourly chart if we want. But I've got a lot of guys that really don't want to spend time on their hourly chart. A lot of them have a job. They don't want to sit there and watch, and they don't have time to watch. So I continue to tell them, be on the lookout for a monster green bar, monster greenies. All right. Now, you don't have to necessarily wait to the end of the day. If you see this playing out, if you think about it, let's just look at where this price was when it opened. It opened at 48.70, let's call it, just ballpark. By the time it crossed 50, right? I mean, you're talking about a pretty substantial green. Go back through. Look at the prior bars. There haven't been that many big green bars. So the way this started out showed a lot of strength and just continued to push to the upside. By the time you were above 50, maybe 50 and a half or something like that, you really could have gone ahead and taken this as a trigger, especially based on the fact that you had the zero line reversal with reverse divergence. You also had a low ADX condition. And I think if you went down to your hourly chart, you would have seen this breaking out above this prior green bar area. That would have given you a pretty good idea that the trend was shifting on the hourly. So this is the combination you want to try and find. I did want to focus in on this zero line reversal and reverse divergence combination. This happens on a decent amount of time, and you do want to be on the lookout for it. All right. And we want to know what is taking place in the ADX. If the ADX can get to a low point, especially when there's these narrow range bars, we know we're probably getting very close to some kind of a trigger taking place. All right. Use all these to your advantage. These are great little nuances that are taking place within the MACD and the ADX. And I think they can give you a big edge over the average trader out there. All right. Have a good week, and we'll see you next time.